We are starting to see signs that the beginning of the next bull run is starting. And so we need to make sure that you are ready and well positioned to ride the next wave on crypto. My bet is that the Arbitrum ecosystem is about to go parabolic. And so I wanted to share some exciting insights, showcase some projects that I'm looking at in the short term, as well as talk about my top altcoin picks in 2024 coming out of Arbitrum. What's up YouTube? Welcome back to my channel. I am Crypto with Nick and I focus on providing you the latest DeFi strategies, project updates, and altcoin gems. I'm going to be pouring all of my energy into research and content and I'm determined to make it this bull run. So if that sounds like you, be sure to hit that like button, subscribe, and let's get into today's video. Without a doubt, Arbitrum is home to the best DeFi protocols in crypto and has become the #1 Ethereum layer 2 scaling solution. If we look at the TVL, we can see that Arbitrum sits at number 4. I don't really count Tron here, so I would actually bump it up to number 3 and has almost $2 billion in TVL locked within its ecosystem. With $2 billion locked within the ecosystem, as we see the market typically shift to more risk on, as we've seen Bitcoin and Ethereum's price action continuously rise, we'll start to see that money rotate into the altcoins on the Arbitrum ecosystem. If you want to check out my top altcoin picks, check the timestamps below. Feel free to skip ahead. But first, I want to talk about the scenario that's setting up. That's why I've turned bullish and why I'm paying so closely attention to the Arbitrum ecosystem. One of the main reasons why I'm extremely bullish on the Arbitrum ecosystem is they are about to see this massive liquidity injection. You can see here back on October 11th that the Arbitrum DAO voted to fund this short-term incentive program with 50 million Arbitrum tokens, right? So this equals over $50 million that is up for grabs that people can go ahead and submit a proposal for. So what you saw then was all the top Arbitrum projects went ahead and submitted a proposal for a grant size, right? Part of that 50 million pot. And in their proposal, they could talk about how they plan to incentivize their project, attract new users to Arbitrum, and how it would mutually benefit the ecosystem overall. With almost 100 protocols submitting proposals, of course, not everyone is going to get a portion of the grant. So there was a few different outcomes for these proposals. Of course, the first outcome is the proposal passes either for the requested grant size or a modified version of it. And a great example of this is GMX. They originally requested 14 million ARB and instead were granted 12 million ARB, which is still great. This is going to be about $13 million for them. Then what you had here is proposals that passed but exceeded the budget. Remember, only 50 million is up for grabs. So again, this affected projects like Gains Network, Magpie, Stargate Finance, which would likely mean in the future, if Arbitrum decided to expand the grant, that these protocols then would be next in line. Then, of course, you had projects that failed to pass, and these were projects like Lido, Curve Finance, and of course, these are some of the biggest protocols in crypto already. They already have some of the largest amounts of TVL and support. So I think what, of course, people were looking for is new up-and-coming projects that could really bring a lot more users and value to the Arbitrum ecosystem. And with all of these projects funded, most of them have already publicly committed their plans and strategies on how they plan to distribute these ARBS tokens. And typically, to summarize, they will be giving them back to users that, of course, interact and use their platforms. One of the best ways that I think you can approach this strategy is looking at the Arbitrum grant size in relation to the market cap of the project. A lot of these teams and protocols have been building in the bear market for the last 2 years. And really what we needed is kind of this shift in sentiment and this willingness to go risk on for a lot more adoption to come to some of these great projects. So shout out to the real DGen GMX who kind of put together this table for us in relation to see the grant to market cap size. And one of the most interesting one here is, of course, something like Lodestar. So Lodestar essentially received a grant that was already 50% of this market cap. If we were evaluating these projects from kind of a traditional fundamental sense, right? The ARB grant basically represents cash on their books now, and we can see that some of this cash now equals 15%, 25%, 50% of its market cap, which obviously puts these teams in an extremely strong position to go ahead and, of course, hire new talent, attract new users, develop new features, right? And really kind of just sets them up for continuous success. Let's get into my top altcoin picks that I think are going to directly benefit the most from this liquidity injection, as well as the ones that I believe will be the strongest to continue to run into 2024. Number 1, we're checking out GMX. It's a decentralized perpetual exchange and is the largest protocol on Arbitrum today with over $400 million in TVL and is receiving the largest grant of over 12 million Arbitrum tokens. Over the years, I've talked about GMX a lot on this channel, and it remains one of my favorites. They've recently released GMX V2, which is a complete re-architecture of how their entire system works, and I believe things are going to get really exciting in the coming months. With GMX's large grant, they're going to incentivize their new V2 offering, and so I want to talk about the differences between GMX V1 and V2, as well as go over the price action of what this token's been doing and kind of share some insights of how the project's been running. Because GMX is completely on-chain and decentralized, it needs two types of individuals. It needs an individual that's willing to take a long or short, and someone else who is willing to be the counterparty and put up the liquidity for that. The easiest way to think of this is imagine a casino. You have players that come and sit down at the games and play blackjack, and then you also have the house, right? So when you go ahead and win money at blackjack, you essentially take from the house, and when you lose, of course, you pay the house. How V1 works is traders who want to be the house and provide liquidity can put their money into something known as the GLP pool. And this is really just a basket of cryptos you can see here below. It's basically Bitcoin, Ethereum, a little bit of Chainlink and Uniswap, right? You can see the weight of these tokens, right? Less than 1% here, and then some stable coins. And people would go long or short, and basically the funds from the GLP pool is what would be accessed through as the liquidity. This was kind of a limiting model for many reasons, right? For example, let's say I wanted to provide liquidity, but I didn't want exposure to Bitcoin, or I didn't want exposure to some of the stable coins, like maybe USDT or Chainlink, for example, right? So it really kind of, you needed a certain individual that was willing to be okay with understanding the volatility and risk of all of these assets in this kind of GLP composite index. What they've done instead is create different trading pairs and kind of fragment the liquidity. So now you have a separate pool for Bitcoin, a separate pool for Solana, Uniswap, XRP, and this is great because now you can basically list any token you want, and if people are willing to provide liquidity for it, then that means traders can go ahead and use that liquidity to go long or short. GMX V2 deserves its own videos. I could talk about so many things, including their recent partnership with Chainlink and access to new low latency oracles, but that's basically the fundamental difference, right? We've gone from essentially this basket of assets to now fragmented liquidity pools. GMX stats, of course, are really impressive, and this is what true product market fit looks like, right? Almost 150 billion in volume. We have almost $150 million in open interest, and of course, generate almost $1 million plus in weekly fees. In the bull market, they've done perhaps sometimes $1 million in just a day. GMX right now is trading about $400 million. It has some of the best tokenomics I've seen. They're almost basically all circulating at this point. And you can see here, if we're looking at kind of a higher time frame, right, I believe we probably did bottom here at this price at $30, right? I don't really see why we would go any lower than this given the amount of fees and adoption that GMX has. And I don't see why GMX can't be a $10 billion protocol in the bull market, right? But at least in the short term, what I'm looking for is I believe we're going to continue to grind higher. I think we'll probably get some resistance here, maybe around the 60. You can see back historically, this has been quite a bit of resistance over constantly. But I think if we're able to kind of push through that, right, you're going to just see this thing take off like a rocket ship. Next up, we have WINR Protocol. This is going to be a decentralized casino, and honestly, I think could be one of the biggest projects developing right now on Arbitrum. I've been a huge fan of gamblefi for quite some time. You can see 2 months ago, I made this video for Rollbit and WINR Casino. Both have gone on to hit all-time highs. WINR up over 200% since this video. The WINR Protocol is the infrastructure where essentially then people can build on top of it. So it actually works surprisingly a lot like GMX, where you have this WLP pool where people can deposit funds, they can earn an APR, and then those funds are used as the house to go ahead and allow people to make different bets on the casino games. Right now, there's 3 main projects being built on WINR Protocol. We have JustBet, Esports Bets, and Degens Bets, and you can see they've done so far about $65 million in betting volume, which is pretty impressive. And since the last time we checked out this video, we've seen a huge increase in users. This is about a 70% increase. If we come here to the side, we can see there is a ton of games, everything from roulette, video poker, slots, horse racing, right? A ton of things. We also have Degen Bets, of course, staying true to its name, where Degens can come and bet up to 1,000x on crypto futures. WINR Protocol right now sits at about a 15 million market cap, and they received an Arbitrum grant size of about 500,000, so pretty significant. And you can see this thing has basically been in a range and consolidating for months, and only just recently has kind of started to take off in November. But something I want you to keep in mind is that WINR Protocol, again, only 15 million market cap. If we check out something like a Rollbit, which is the top casino play and recently just hit new all-time highs, right? Sitting around a $670 million market cap, I really don't see why WINR Protocol couldn't be 10% of this or 15% of this easily. So I see a ton of upside here with WINR Protocol. Next, we're going to take a peek at Camelot, which is a concentrated liquidity DEX on Arbitrum. So thanks again to Real Degen GMX, but we can see that Camelot has plans for its distribution, right? So 50% to partner pools, 20% to ARB pools, 20% to Corb, and 10% reserved for future partners. So out of the 3 million ARB tokens that they're giving away 90% of it of incentives to, of course, attract new liquidity to the platform. And Camelot has a lot going for it, right? Of course, it's a concentrated liquidity DEX integrated with things like Paraswap and Ocean. You can go ahead also, it's a launch pad for new projects. Some of these have done significantly well, especially things like WINR Protocol that we just talked about. Because it's the top DEX on Arbitrum, it's able to generate a lot of fees, which of course result in really good APRs for people who are willing to provide liquidity. You can see here this Grail USDC at over 200% APR. Grail tokenomics has a really good flywheel. When you're farming position, you essentially receive it in either Grail or xGrail, but you're really incentivized to hold xGrail. So this is going to be an escrowed version, non-transferable, which of course removes supply and selling pressure from the market. And you're incentivized to hold xGrail because you get things like dividend access, a yield booster, and even access to pre-sale on the launchpad that I showed you. And when people get excited about Grail, they get really excited. You can see here, it had this massive pump in the past. And even though it fell, what is this? Let's check it out. It fell a total of 50%. It went on to do another second massive pump and reach all-time highs at around $4,600, right? So it's right now trading about $1,200, sitting about a 20 million market cap. And if you look at the fees, the Arbitrum grant size, and the impact of their flywheel, right, I think this could set up to have some nice run on the back of this liquidity injection. Next, we're going to talk about Radiant Capital. They received a grant size of about 2.8 million ARB tokens, or about $3 million. And this is going to be an omni-chain money market, meaning that you can deposit collateral on one blockchain and then go ahead and borrow against it on another, which is pretty cool. Radiant has really good farming APRs. You can see here, you can deposit your Ethereum. You're going to earn a total of over 7% APY. A lot of that is going to be in the Radiant token. Of course, even borrowing, you're going to pay 9% to borrow, but again, they're going to reward you an additional 19%, right? So you're still going to have a plus 10% gain here on the borrowing APY. And they've been enabled features to help you leverage up your position and loop it. So if you go ahead and do that route, you can see you basically end up here with an 82% APR using the looping mechanism paid out in Radiant tokens. So they have this flow chart here where if we walk you through, a lot of the Arbitrum grant is going to go to DLP boosters. So you can essentially lend and borrow money, and then you basically have this option where do you want a DLP boost, you get the base market rates, or do you want to get the boosted emissions, right? So some of those high APRs that we talked about. And you can see here, as you earn your rewards, you have a few different options, right? You can exit early with a penalty. You can receive 100%, but you have to vest it, or you can, of course, zap and lock it into this dynamic liquidity. And when you do that, you decide to lock it into the dynamic liquidity. You can see here you receive protocol fees denominated in a ton of different things. And this, of course, depends on the success of each of those individual like money markets, like people borrowing and lending, and the amount of fees being generated from such items. So a lot of the grant is going to go for people who have elected to lock their DLP. One of the reasons why I like Radiant Capital is, of course, you have these blockchains that all kind of operate on their own islands. So you have projects like Radiant, which are trying to be omni-chain, bring blockchains together so that way you can go ahead and interact with them no matter what ecosystem you're on. This project's sitting right now about a 90 million market cap. But again, with the incentive model, you're going to have a lot of people choose to not claim the Radiant tokens, but again, lock them up because they want to receive fees from the platform, which again creates kind of this flywheel effect to allow users to incentivize to reduce selling pressure, reduce inflation, which of course sets us up for what I'm expecting is a nice rally. I want to quickly touch on two more projects, but I'm not going to dive into them because this video is getting way too long. So let's wrap it up here. But Lodestar Finance is really interesting because they've been given a grant size of about 750K ARB tokens, which was about 50% of their market cap at the time. And what's really kind of interesting about this project is, yes, it's a money market, but they really specialize on tokens that you don't traditionally see. So you can see here things like Magic, GMX. This is going to be a Plutus GLP. And so what they try to do is provide a marketplace for basically Arbitrum tokens. If we check out Lodestar's price action, we can see this thing is just a $3.4 million market cap with only 700K in liquidity, right? So super small market cap, not a lot of liquidity, meaning that we can either move up and down very quickly, which is kind of the risky bet here. But you can, of course, see it's starting to take off because people are betting with this Arbitrum grant being so large in relation to the size of this project that hopefully they can do a lot with this and bring a ton of new value in users. The last project, of course, is Jones DAO. So they make these really cool vaults that are basically one-click strategy vaults. So you don't have to spend all your time trying to curate these complex strategies, these delta neutral ones, all these things. So you can go ahead and see they do it for you, right? This gamma neutral USDC vault or a leverage delta GLP, right? So really interesting project here. And we're seeing the same logic here with Jones DAO, right? Again, only 8.7 million market cap, 2.7 million in liquidity. So a little bit bigger than Lodestar, but still doesn't take a lot of force to move this, right? Both of these projects are significantly smaller than everything we've talked about, right? For example, Radiant Capital, GMX, even smaller than WINR, right? Which I typically would consider small to begin with. I just wanted to summarize everything we've talked about. So of course, GMX, Radiant, Camelot, WINR, and Lodestar. I did throw Pendle into this list. I didn't touch on it too much. They have expanded to the Arbitrum ecosystem, but I really wanted to talk about more native Arbitrum projects, even though they as well received a grant. In terms of my longer term vision, I would probably really focus on things like GMX and WINR. And then kind of for where maybe the midterm, I'm really looking at Grail. And I think on the shorter term, I'd be probably looking to pay more of the short-term pump when it came to something like the Lodestar token here. To wrap up this video, it went on a little bit longer than I had expected, but there's a ton of information here to cover, and I really think we are setting up to see a nice rally as we approach 2024. So be sure to join the completely free community Discord, right? Follow me on Twitter. If you got a message, just shoot me a DM, and more importantly, drop a comment below. I want to know what projects you're excited about, even if they are not within the Arbitrum ecosystem, right? I always love researching new things, but see you in the next one. Cheers.